What's going on, guys? Today is the 26th of January, Wednesday. Today was FOMC. Big day today. In regards to movement, we'll dive into it now. Let's just go through the telegram of today just to kind of review the day, see what we were thinking, see what would happen. So basically starting it off, looking at the 4-hour rejection block. I'll open it up here. You can see, I don't know why the quality is so terrible, but it is what it is. You can see rejection block level right there. And I just said, this is where I'm going to be looking for any longs, because there is potential that we could be, price could be moving to take out all that liquidity to the upside, just because we swept so much sell side liquidity. I know we're still in bearish structure. However, there is that potential that we could come sweep that. But again, I said I won't be entering anything past New York Open. And then I said, if the downside is going to go, it's probably going to come back down to around these levels, about 20 pips below the previous day lows, into about that. I said, what did I say? 12500s to 12400s level. Wait, is that the right level? Yeah, 12400s, 12500s right there. Okay. And then what else? So just looking at the dollar index, we sweep a significant level here. We get this kind of rejection, setting up some equal lows here. I thought that for sure we were at least going to get back down to these levels. And then what else do we say here? I said in minimum for a day trade, like if we're looking at any kind of day trading setups, if I'm going long, it's going to be anywhere from around these levels up into take out that London high and into this little gap up here. That would be my target for the actual long positions. And then maybe I would just hold on a little bit of a runner to see if FOMC could push up to the top. So that was the idea. And then you can see here on dollar index as well, you know, we had this channel. I knew that these lows were at least going to get hit, right? Those equal lows. Or I had a good feeling that these were going to get hit. At least, right? Because if we think about it, these would also be equivalent to the London lows that were swept on, or sorry, was this the London low? We'll dive into it. It's okay. But anyways, yeah, it worked out super well. You can see here, hit that level and then absolutely died, hit this and ran up. And I said, I want to see shorts above London high. I don't want to be shorting at London high. I want to be shorting above it. And you can see that it actually hit London high. It didn't go exceed it. It didn't exceed above it. It had a little bit of a imbalance fill there. It tagged it and then started breaking down. This was one of the trades, like one of my textbook trades. Again, is based off of the market maker sell model by ICT. This is it right here. Essentially, I pointed it out. And so that was going to be the trade I took. I was actually on a call with a cardiologist for my COVID symptom thing. So unfortunately, I missed that, but I posted in here after. I was like, this was like A+ for me. I was looking at it too while I was on the phone with the cardiologist, and I just couldn't take it. And then this one was the other scalp that I was going to take right here, just to target down at these levels. But it just missed my entry, and then it proceeded to go down. So as soon as we hit that level, I was confident that we were going to be going up now. And you can see here, we reacted off that level. That's actually where I had a limit to begin with, but I just didn't want to enter any trades after that. After I got in a short trade on GU, that one hit. So I was already up like 3R for the day. And so I just said, that's fine with me. Like, I don't need to test my luck anymore, even if there are setups, especially on the FOMC day. So again, yeah, basically I was looking at this though, and I said, it looks very similar to the 4-hour structure, right? Where we have this kind of breaker block, we come back down correctively, and then you can see that price went up and took highs. So it was the same kind of logic here. For me, it seemed like this was the most likely option after taking out all that low, that sell side liquidity pool below all these levels, right? And then that's why I said it's not that I'm saying price will do this. It can do whatever it wants, specifically with FOMC approaching. It can rinse all those lows and whatever. That's why I don't trade it. But again, it's the same process to analyze, to analysis. Okay. And then, yeah, as you can see, what I was looking at was that this level, again, I already said that this was the beginning of the post, but I was looking at price to come back down to here in a bearish scenario. And if we just open up Euro USD, you can see, what did I say? The 500 to 400 level, which is right here to right here. So I said that was probably going to be the daily range if it goes to the sell side. And you can see, right, here was London high right here. Look at that. We clear out London high, right? Clear out London high. And if I was trading FOMC, this is what I would have waited for, right? I would have waited for the clearing out of London high. Okay, let's inspect lower time frames. Let's go to 1 minute. What do we see here? We also see a sweep. We also see a break of structure. This comes right up into the extreme. You can see that liquidity was injected on this candle right here, right? You can see entered right there. Obviously no wick, no nothing. So this is where that injection came from. Boom, right there. It touches it, immediately consumes, right? You can see the mitigation right there, mitigation right there, mitigation right there. And that's it. And then it goes like this one would have been a nice one right here to me personally, because we had this little high inducing. And then we had this whole block really, this whole block you could have used essentially just to take the trade there. So yeah, this could have been a good trade if you wanted to do the continuation. And let's just see if we have any targets that we could look at. Again, this is where that level was, and you can see it lines up beautifully with that -1 target that's also in that this pool here, the one that we said, the 12,500s to 12,400s. That's what I was looking at. So yeah, so if you played NFT, sorry, I was going to actually say NFT, but FOMC, then you could have caught that. But let's go over the daily cycle essentially today, and like what I was anticipating from top down. Okay, make it easier this way. So first of all, if I just pull up the monthly and weekly breaks here, you can see that yesterday, I'm just going to mark it out with this. Okay, all of these are going to be sweeps, these little dashed lines. So yesterday, and I believe it was the day before as well, we had this weekly low taken out, this weekly low taken out, and then there was another daily low, if I remember correctly. Yeah, I think there was a daily low right here as well that got taken out. And then basically I was saying in yesterday's video, if you go back and watch that, you'll see that I said, okay, there's an option. There's two options that I said, that this one is going to come back up and take out and clear at least some of this liquidity before coming down. That's option one. Option two is that this whole order block is going to be used. This is where that, there's a lot of traffic in here, but I said, that's why I was looking for longs yesterday, right? That's why the longs were taken yesterday to do what? Fill this imbalance right here. You can see we fill that imbalance, which is roughly 50% of this order block, right? Roughly 50% of that order block is where that imbalance fill is. And so this is where I was looking for the high of the day, essentially. If it was going to come in and the next cycle was going to be down, it would have been from this level. And you can see right there, -27 target hit beautifully. And you can see like that was just perfect, in my opinion, from the higher time frame. However, because of how price was developing yesterday, I thought that what was going to happen was that this was actually just going to keep going through. I didn't think we were going to get the pullback and then up yesterday. I honestly thought that this was going to go right through and start taking out some liquidity. And then for FOMC today, we were going to get this down move like that after taking out all this. So that was the logic behind it. And I think it's pretty valid logic. You just have to adapt to the market environment, right? And so essentially what happened today was we got rejected from there. And that's something that I wasn't really, that's what kind of differed or made me think that the downside option was definitely still available and definitely still a thing, was because we rejected that level and went down. So this is where I would be looking to short anyways. However, I would want to see some intraday liquidity get taken before any shorts happen. And you can see here, if I go on the 15, like what happens, right? You can see that this all happened in Asia, which is not when I want to be trading. And not only that, but this was yesterday's London high and everything. So I just figured that this was going to get rinsed first, to be honest. But what ended up happening when I woke up, what was it, 6:30-ish, right around. So when price was right around here, I just marked out the 4-hour rejection block right here. Okay. And then I saw that we had this imbalance right here, essentially, that was forming. And I said, okay, like, I think we're at least going to come back up into this imbalance here. as I showed you in the thing where there was London high right here. Okay. Yeah, so this was London's high right here. And so let's just go over it because yeah, after we see this consolidation, we see the break, and now we're coming back up. I just had to, the way that it was developing made me think that from here, this was definitely going to go up to at least take out London high into this imbalance area before coming down, if it's going to come down. I knew, not knew, I shouldn't say I knew, but I was very confident in that because we hit a significant liquidity pool. You can see 1, 2, 3 major pools right here, and we rinsed them yesterday. So the thing is with liquidity, especially, like, that's why this one was such a high probability trade, was because we rinsed these massive pools, and then all of a sudden it's like, well, what's the next move? It can't just keep running pools down in one direction. I mean, it can, but it's not the likely scenario. And so as soon as it hits major liquidity pools, what's going to happen? Eventually, there's going to be some profit taking. Eventually, there's going to be some pullbacks or even reversals, depending on the structure and a whole bunch of other things, right? Fundamentally, stuff like that. But anyway, so it finally gets to this level. We see a level where we're respecting. Okay, now it goes up to this target. I thought, again, like I said, I thought yesterday we were going to come up and at least sweep this. We didn't get that, so we get the rejection and then continue down, right? It is what it is. But now today I woke up, and again, it's right here. So let's go down to the smaller time frame here. So yeah, you can see this is the rejection block. We start consolidating within it. As soon as we started seeing this, I was actually shorting GU at this time, which I got a decent trade on. But you can see that it was consolidating right here. And I saw this coming up really inefficiently on EU. And I just knew that everyone was looking at that as a break in structure and continuation to go up here. So as soon as I saw that happen, and then I saw the sweep, I knew for sure. I was like, yes, I'm looking for more upside. Again, I wanted it to take out these London highs. You can see it in the Telegram group where I said that. I said, when price was running up here, I was like, listen, I don't want to take any trades from this level. I would prefer to see it sweep and then look for trades down. And the reason being is just because, again, we swept significant liquidity yesterday. We caused this move up. There was really only intraday liquidity swept right here. And so before we continued a big move down for FOMC, I knew that they were going to have to pool liquidity before they can move it in that given direction. And you can see here, what did they do? They made equal highs in London, right, to build up that liquidity, and then they built equal highs for equal lows for New York. And so essentially it comes down, right? What do we have? FOMC comes out, we sweep up, we take this liquidity, and then we come back down, we mitigate on a smaller time frame, and then we continue the move with all of this liquidity that was built on the bottom now being the target, and then obviously this huge wick, right, which everyone is going to be longing from. Excuse me, guys, sorry, someone's knocking at the door, so my dog's going to go insane here. But that's about it. That was pretty much it for like the context of why I was anticipating this to happen. Okay, and so let's go on the 1 minute. Without over refining too much, you'll see what I was looking at. First of all, again, consolidation. We had fractal consolidation here, sweep. We had a breakup. It didn't mitigate this order block, but it did create another order block right here. So these could have been taken. All of this could have been taken if that's a part of your trading style. And again, you would have been looking up here. And this was London high right here. Okay, and you can see why it held, right? It makes sense why it would hold after taking liquidity, breaking structure right here. Okay, breaking structure right here. This was the shift in market structure right here. This never got mitigated until this point. And you can see there's a nice imbalance there, and it gets filled beautifully before that rundown. And it was a very, very weak leg that went up, right? There was a very, very weak leg. You can see there's pockets of inefficiency, especially in that last leg. And then you see break of market structure right here, and then we start coming down. Now, at this point, this was my bias. So my bias was essentially at this point, as soon as it hit up here and I didn't get the sell I wanted to, I waited and I saw we had a market maker sell model here where we had the smart money reversal, and then we had that equivalent kind of correction. And then as soon as it came back down, and we made another correction right here. I was very adamant on taking this position. Again, I was on the phone with the cardiologist, so because of that, I didn't actually take the position. But again, it's all posted in the group, so you can go check that out. But you can see this would have been my trade here personally. This would have been my trade here personally. And then there is the inducement for that level right there, right? That little intermediary high right in front of the level that I'm interested in. So that's sponsoring the level that I'm interested in. Boom, we take it. My target was right down into this imbalance right here. If I just mark it off. Okay, so right there is the imbalance that I was looking at. You can see that. And then at the same time, this was the last down candle right here. And that was the one that really, it formed below all this sweep. So that was really the one responsible for the sweep. You can see it was never dabbled into. We have inducement right there for it. And again, just beautiful, right? The second trade I was looking at was right here, where we had another shift, or yeah, another break in market structure right here. Okay, another break in market structure right here. I was looking at this holding right here, and it was literally just above this little high here, and I was like, okay, perfect. It's setting up again. It's doing almost the exact same thing that's happening here. So I actually set my order right here, because I knew that we were at least going to be coming to, because this really stopped nowhere, like nowhere of interest to me, where I'm like, what, it stopped in between all of this stuff. Like to me, it didn't make any sense why it would stop there. And I knew that we had an unmitigated level right there that I'd be interested, or that I was interested in taking longs at, which again, I did have my limit set right here. That I took off because again, it was late. It was kind of getting later into the session. And I was like, you know what? It's FOMC. I'm done. Unfortunately, I should have, or I shouldn't say I should have, because I followed my rules. I said, I'm only trading New York Open today, which is good. You know, I'm proud of that. I'm able to do that nowadays, because before I was an absolute degenerate and just said, yeah, I'm going to do this, and then just do not do that. So today I did what I said I was going to do. It just played out, right? And again, where was the target? Target was London highs. Right there. Boom. So that would have been a 9R trade right there that I was personally looking at, and that I actually had my limit set on that. And so I actually just took this on demo because again, I was just on the computer anyways, but I just didn't want to risk actual capital for FOMC. But anyways, getting back into it, you can see that obviously this one didn't get triggered in, or else that would have been another 3R. So that would have been a 4.5R, 3R that just missed. No worries. What ends up happening here is we get a sweep. There was no significant sweep. This was the significant sweep of the intraday. This one, I guess you can say, let's go in like a 2-minute. Yeah, like this is a nice level, honestly. This last order block, for me, this is an order block, the last down candle, and then this one swept it, come back up. Like to me, this is a really nice order block for me as well. And then so what ended up happening on the 1 minute, you can see I was just playing around, taking some trades, and I got this one here where I saw it started to build some liquidity right around here. I knew that there was this clean leg, and I knew as well that there was this order block right here that I wasn't sure if it was going to do this, if it was going to come back up here and then come back deeper and then go up, or if it was just going to go up. And so because of that, I just took it on demo, just this right here. Again, for me, this is a good order block right there. It was induced right here. Right. If I go on the 2 minute, you can see, I think it was the 2 minute. Yeah, you can see that it was a 2 minute clear order block as well. 3 minute, you can see, yeah, it was a rejection block after a sweep, after an intraday sweep. So again, there was a good couple confluences for intraday to take on this trades, or on this trade. I don't remember seeing any. Okay, yeah, there actually was. I didn't see that at the time, but there was a divergence right there. You can see this made a higher, dollar index made a higher high. EU made a higher low, right? And so as soon as we get this right here, this break, this was a valid entry again for me right here. And I saw basically this last kind of down move. And as soon as I got that break of structure right there, that was it for me. Again, so I entered on this long right here. and I entered on this long right here. I actually entered right up at the wick on that one. And then again, target just above the, or just at the London highs. And you can see here, which is so funny. And I was seeing it as price was developing. Here, let me actually put this on as well, because this is where I was also looking at getting in. And again, I didn't take these, right? I took the GU shorts today, and that was it. Honestly, I missed this one from, again, the cardiologist appointment, missed this one because I got swerved. Then after that, I was like, oh, it's too late to be trading, right? So all these I didn't take, just to clarify, right? This is just back testing and just seeing what was available for the day, given my rules. But anyways, this is what I was looking at here. And then essentially I saw it come up into here, into this block. And then I saw how it came up, and I was like, oh yeah, this is going to come back down and induce sellers into the market essentially. And so that's exactly what happened. If you go on the 5 minute, I believe it's the 5 minute. No, is it not? Is it 3? Yeah, okay, it's 3. So I was looking at this block here. Well, I was actually looking at this whole thing, the series of down candles. But as price was coming back here, it was, what time is it? Right. So it kept coming down throughout just before FOMC news was released. So I just refined it to like the very last candle, and you can see it tapped it, went up and took out each and every one of these sellers that was in here. And I can guarantee if you set a limit there, it would be absolutely swept through. Like your stop would be swept through hugely there. But anyways, and it hits our target, right? It grabs that interim liquidity and then continues down with its larger cycle. So that was the consolidation. And then that was it, right? So we come back down here, we grab London's liquidity, we make a really, really big break, right? What does it do? It makes equal lows with what? New York's low, right? The New York sweep low. Comes back up, mitigates, comes back down, mitigates, break a market structure, imbalance fill, inducement, boom, goes. And so, yeah, that was basically it for the day. So again, if you wanted to take a trade too, you could have definitely taken this one. I wouldn't have taken that one personally right from the top. Just me. That's not something I would take. This one here had my confirmations of what I would like to see in a trade. And you could either put your stop there. I would personally just put it above this whole correction again, just because it's FOMC day. And again, let's get some decent targets where we could go to hit right there, -1. So that's how you adapt to the day. Like, again, the idea was that potentially there's a chance that we go from here and we go up like this. However, it wasn't giving that to us, right? We realized that, okay, yeah, there were good buy opportunities throughout here. And if you took them, then, they're good buy opportunities for me. But you have to be aware that where's the intraday liquidity? Where's the intraday areas where it's going to be a problem for price to get through, right? And the reason why it's a problem for price to get through is because there's going to be counterparty liquidity there. If you're longing here, right, there's going to be sell orders in the form of take profits, as well as stop losses up in these levels. And so you're going to have some resistance up in this level, up at a London liquidity wherever it was trending down all day. And then we come back and mitigate the high. Everyone's expecting this low to be broken right here. It doesn't. And then it comes back up and takes them all out. You gotta understand where the liquidity is in the market and adapt to it. So we didn't get the position that I didn't get what I was anticipating necessarily to take out all this level. But as price developed, it was very clear that this was going to be the next move as price started developing right here. Right, as soon as we rejected right here, we swept, and then we got this whole structure right here on the 1 minute, right here. That's when it became very obvious that no, okay, our buy bias wasn't actually right for today. That's not what FOMC is going to do. The intention is going to be down, and so let's just follow order flow and let's follow our strategy and let's get in and try and ride it. Right, that could have easily been done. Again, want to reiterate, just for the sake of transparency, that I did not get in any of these trades. None of these, because again, I traded GU early in the morning, and I'll show you GU quickly. I know that we don't really touch it too much, but it was this right here. Okay. Swap liquidity. Swept liquidity, sweep, break a structure. And then I just entered, it was right here. Okay. So there were two possibilities where there was this high right here. Okay. This was the last order block that swept liquidity. But ultimately what I saw was this, is I saw it was really just, it mitigated off of this. We got a really strong move down, and there was imbalance in here, and it was being induced. So what I did was I just entered right off of this. It was actually lower that I entered. I entered right here, and I just put my stop above here. And again, target was London low. But for me, I saw that these were equal lows here. So I saw that, and then I saw that there was this kind of inducement to this this clean leg right here. If I go in the 5 minute, I think it might be clearer. Yeah, right here. So at this point, this is where I took off majority of my position, right at 3R, just about 3R. Okay, I took off majority of my position. It bounced back up, came right back up into the last previous structure, and then we came right back down again, mitigating, and then mitigating. But look what happens as soon as we take out London lows. Again, we start ripping up, taking out all this low resistance liquidity. And you can see it does, in fact, sweep it before we get that down move. Okay, again, there was potential. Let's see if there was potential to get into this as well, or how I would have done it. So we get that sweep. There's that break in market structure. We don't get that fill. But right here is going to be that internal break in structure. Again, there was nothing really here. Honestly, there was no real entry that I personally would have liked to get into, right? Because again, let's see, did it touch the front of this? Okay, so I guess if you wanted to take out this whole correction there, and you have a 12 pip stop, you could have done that. For me, I like to see how, like what happened in EU, where it mitigated some sort of imbalance within that level. And then that gave me I would have been much more confident to take that, as opposed to this one kind of just in the or not in a random part, but at the very front of this consolidation. So yeah, that's it, guys. Honestly, it was a really good, like, fun day today to see how price developed, and there was a lot to learn today for sure. Specifically in regards to like that intraday liquidity pool, like the intraday liquidity pools and all of that, right? You can see, yeah, I marked out London's high here. You can see how important all that stuff is, right? The internal structure here, and like where people's orders are going to likely be placed from the trading day. And you can see once it gets there, the rest is history. So yeah, I hope you guys enjoyed that. Please let me know if you did, and if you learned something. And yeah, it's been great, guys. I think something incredible today that we hit 500 subscribers, which is so cool. Like, I was not expecting that at all. I know I say it basically every time, but it's just really cool, because I started off and I just said that you can go back to the first video or the first two videos. I like blatantly say it, where this is just my online journal where I'm just testing, and like, I'm just putting it out there, more for accountability purposes than anything. And the fact that it's grown, and like I'm receiving so many messages of people like learning things and stuff like that is just overwhelming. And I'm, again, just super appreciative of it. So thank you all. And let's keep going. I hope I can help you guys out some more. And I hope we can all, make money along the way and absolutely kill it. So I'll catch you guys in the next video. And yeah, have a great night, guys. Cheers.